Beginning with a very important story that has been making headlines for the last few days, and that is RBI, the Reserve Bank of India's crackdown on lending and lenders, both lending via using shares as a collateral and gold as a collateral. Both NBFCs or non-banking financial companies getting under the RBI radar. It was first IIFL and IIFL stock tanking over the last couple of days by 20%, hitting lower circuit on both days, and then it was JM Financials. But bear in mind, this is the latest as far as this week is concerned. The Reserve Bank of India's crackdown on India's financial services sector has been ongoing. It began with Bank of Baroda a few months ago, and then came the big news a couple of months ago in the form of Paytm in fintech sector. And now it's all about lenders and also all about lending against a collateral. Kartik, I'm going to begin by talking to you because we have a very special guest joining us to help us understand what this RBI crackdown means. But let's first put this into perspective. Kartik, what is happening here at this stage is that we're seeing a variety of crackdowns. We've also seen a crackdown on Bajaj Finance in between as well, which I haven't mentioned in my introduction. But the fact of the matter is that it's a regulator, be it Paytm or be it anything else. If you ask the RBI today, it will say that we are doing this as a job because that's what the regulator's job is. The regulator's job is to protect the people of this country, is to protect the people who trust India's financial services sector. So in that sense, you can't really call this an overdrive, can you?
I would definitely call it an overdrive, but a positive overdrive, Krishna. Okay. I would not look at overdrive as a negative word. I would actually, in the 20 years or so that you and I have both spent in newsrooms, most of them being business newsrooms, I don't think we've seen a series of crackdown after crackdown after crackdown in such frequency by any regulator and no other governor, in fact, at RBI. So I think it is definitely a series of crackdowns. It is a series of the RBI, being very, very sure of what it is doing, being very firm-footed, and not really being shy of using the heavy-handed approach in implementing these crackdowns. RBI is not shy of taking hard decisions, not shy of taking tough decisions, and not really waiting for any bubble to burst before it really steps in.
Fair enough. Not waiting for a bubble to burst. We have Mr. Srinath Sridharan, policy researcher and corporate advisor, now joining us live all the way from Kerala. If I'm not mistaken, Srinath, that's where you are. I don't know, what exactly you're researching over there. I'm sure it's something very, very interesting, and we'll read all about it on your blog eventually. I'm guessing if not, you're doing this to advise a particular company. We wouldn't know, mystery man in Kerala. But the question that I have to ask you is that how do you view you take into account what's happened this week with JM Financials and IIFL, but it is coming on the back of huge crackdowns. RBI, the Reserve Bank of India, is already in the news of what's going on with Paytm. We've seen it with what happened with the Bajaj Finance as well. Clearly, lending is an area that the Indian banking regulator is focusing on.
Yeah, that's true, Krishna, but I wouldn't call it a huge crackdown at all. Okay. It's not been huge at all compared to our market size. And why is it surprising for us? For the simple fact that a lot of these companies which were seen as holier than thou are also being penalized. And I think this is the new RBI or the new market avatar that we see. We must get used to the fact that the regulatory penalties that India has imposed have been very minuscule. But in the coming months or years, I think some of these penalties are going to run in lots of crores, not just simple lakhs and crores. And I think that's a lesson for anybody in financial services, that if you're in the business of financial services, be ready to be audited, be ready to be penalized if you are found faulty anywhere else.
Okay. But what happened with IIFL and IIFL stock is a penalty in itself, isn't it? The stock tanking by 20%, hitting lower circuit on both days. So in that sense, the message that an RBI sends out with a crackdown like this becomes very, very important and has an impact on the financials of the company, one way or the other.
So Krishna, that's a very important point you're making, but it's both ways. Not because they're listed entities that they're feeling the pressure, but because there are a lot of finance companies are being listed, the regulators, not just RBI, including SEBI and IRDA, are going to find themselves increasingly under pressure to be a lot more tougher on their entities. They will have to act well on time and penalize their entities for any faults, whether it is process gaps, whether it is governance gaps or any of the issues. They cannot wait for a long time. simply because they're also not just, as you mentioned in your opening address, about consumer protection, but this is also about stakeholder protection, right? I mean, these are listed entities, which means that they're also having shareholders who may not understand the complexity of those businesses.
Srinath, I just wanted to come in here and hey, thanks so much for joining us. I know you're traveling and it's not an easy day for you to be here with us. But you know, something very interesting which RBI Governor Shaktikanta Das had said soon after the decision of the last MPC, where he held on to the repo rate, was that perhaps there is also now likely to be the RBI's intervention into the e-trading platforms. We haven't seen, thankfully, yet anything untoward from the likes of Grow and Zerodha and those companies, but RBI was very categorical in saying, in fact the governor was very categorical in saying that e-trading platforms is something that the RBI would want to intervene in. What is your reading of that message?
So again, one of the reading, if you see it in conjunction with what they've acted against JM Financial, has been that the loan against shares or lending to HNIs specifically for buying shares in the run-up to IPOs is something that's of concern, not just for RBI, but also for SEBI. So in the financial markets, for Kartik's and Krishna's exuberance, I think we also have to await SEBI's orders, expected later this week or next week, on loans against shares, and is it going to impact either of these entities, because IIFL and JM are also equally popular when it comes to loans against shares, or for that matter, not just e-trading platforms, Kartik, but also all the wealth management platforms, which arrange for a lot of these loans for their clients to invest into stock market.
Is there fundamentally, Srinath, is there fundamentally a problem with that particular model? If I go to a lender, if I want to participate as a retail investor in the IPO story, I don't have the money. If I go to a lender, take that money and try and bid for an IPO, is there legally a problem with that approach?
So legally not a problem as long as you're sticking to the collateral limits basis the security that you give.
Yeah.
But the challenge in governance will be, let's say, if I am going to list one of my entity or subsidiary and my own lending platform or the wealth manager within my own group arranges loans for you to invest in my IPO, where is that conflict of interest lie or slow down? And that's a challenge that there is there. And we're also seeing the intersection of two regulators here. One is RBI and SEBI. And I think the classic case is going to be when SEBI's order is out about investigations around loans against shares and or IPO. I mean, if you look at the last 2 years, Kartik, we've had a huge run-up of IPOs, right? And every IPO was oversubscribed. And there have been times when you have not even heard of that company and it is oversubscribed. And I think, and somewhere, where is that easy money? And it also tells us that there has been a FOMO investment. And that is the worry for regulator because, I mean, let's face it, as a country, we want capitalistic behavior, but with socialistic regulation, which means that if I lose money because I took wrong advice, but I still would blame the regulator. I mean, it's a very, very thankless job being the regulator. So I would support them in saying that they will have to be far more tougher. I mean, let's say in some of these arbitrage, let's say in the Western world, would have a penalty of few $1 million, right? And here we would penalize 2 lakhs and 3 lakhs. I keep joking. If you give it to a lawyer to read the regulatory order and explain to you, the lawyer costs more than the actual penalty.
Right, Srinath Sridharan there getting us, in a capitalistic system, we need socialistic regulations. Coming from a so-called communist state, he is currently in Kerala, but we're going to leave you to it in Kerala. Have a wonderful trip. Hope to see you back here on the show more often very soon. But for now, thank you so much for taking time out, Srinath.